tell your clients or advise your clients to protect their assets?
I always tell my clients to there's this concept of you own nothing but control it.
Okay.
You're able to utilize the benefits while you're still alive. Because when you think of, and I always ask this to my clients, when you get sick and if you're the main breadwinner, income stops coming, but you're still here. And to make matters worse, I always ask them, does you being sick make it, life better or worse?
If you fall sick, you go back home.
Yeah, when you fall sick, you call off or you stay home. So, you're not on the clock when you're sick unless you do something in the line of manufacturing and work with machineries, and then maybe a machine does something to you.
That's only when it covers you.
Yeah.
Okay. All right, guys, welcome back again to the Nexus, where we connect ideas and spark conversations of change. And today I have a guest, the usual guest, and we're going to be talking about financial literacy that is among our community. And I hope you can pick and learn from this, or there's something that touches you, something that you know or you don't know, and it sparks your curiosity. But without much ado, I'm your host, Mike, and
I'm Rahab. Nice to be here.
Pleasure's all mine.
Having me again. It's always nice to.
I'm glad. I'm glad you can make it.
Yeah.
Yeah. Well, today I have a question. I think you invited me for.
Mm-hmm.
It was what was the event again? I forgot. What's the name?
Champions Bowl.
Yeah, the Champions Bowl. Yeah, in Texas. It was about financial freedom, and I think I picked and learned a lot of things, and I think there's things that I had known, which I did not apply or imply in my life, and I think at this point in juncture, I would love to. Okay. But given that you've been doing it for a while, I'd love you to talk for the people who don't know, or to the people who don't know, or to the people who are watching and they don't know much about it, or they've heard about it, but they haven't taken action.
Yeah.
So today is the chance. Here's your platform. Let them know.
All right.
So let's talk about life insurance. How many people do you think know about life insurance?
Honestly, not a lot. So they know of it, but they don't know about it. And what I mean by that is, yes, we are aware, but there's a lot of misconception around that. So pretty much what I do, and for those that don't know me, I work in financial services, and I help my clients with making sure that they're making financial decisions that align with their values, their goals, and their beliefs. And we do a lot of things from asset protection, income protection. We do college planning for those parents who have kiddos. We do a lot of retirement planning, because a lot of us want to retire comfortably. True. Nobody wants to work.
Yeah, nobody wants to work. Yeah, the entire
60 life. Or whatever. So one thing that I get a lot from my clients is they're not educated of what a powerful asset life insurance is. And my goal is to make sure that they understand that this is actually an asset that can help elevate your financial goals.
Yeah. All right. So speaking of, I think life insurance is a broad term, and from what I understood, or from what I picked from the convention, it's different types of life insurance. And it all depends on which one you pick on. Some got their own advantages, some have their own disadvantages. And I'd have to speak about the group or the work life insurance. How do you think it works? Or for the people who don't know, how do you think it works? And what do you think people know that they're being lied to? Of which I think I did, but I think you need to explain more to them. What do you think is the misconception people have about it?
So first, let me start with how many types of life insurance there are. So there's not one. I always like to say it's not one size fits all. So there's 4 different types. And the first one is group, which is what most people know. So that's the insurance that you get through your work. And then the next one is term. Like the word says, this is a short, or it's a period, or it goes for a period of time. So you can have a 10-year one, a 20-year, 15, 30 years. And then we have, so those are temporary, meaning at some point you have to renew them or you have to get another one. But then we have two which are permanent, which means once you get this, the very first time you apply and get approved, then you will never have to reapply again.
Okay.
So number one is whole, and number two is what we call an index universal life, which is an IUL. So let me talk about the group. Why is the group even common? It's because this is one of the benefits that employers offer their employees. So let's say you work at a job, they will offer you group life insurance. And this is traditionally actually not considered insurance. Why? Because let's say, for example, you change jobs, or maybe you move to a different city and now you want to do something different, or let's say you get terminated. As soon as you leave that organization, that insurance goes with it. You don't own it, if I may say that. So that's not yours.
So it doesn't matter how long you've been holding it for,
it doesn't matter.
You've had it for.
No, because it's pretty much the companies.
Okay.
Some companies actually offer it to their employees for free, so they don't have to pay anything. It's very, very cheap.
Okay.
Very cheap. So that's the one of the advantages is the fact that some companies offer it for free. Others will offer it for a very, very low premium.
Okay.
But disadvantages of that is it's not permanent, meaning once you leave that organization, you leave that job, then you don't have coverage. Or if you get terminated, you don't have coverage.
Okay.
Yeah.
So, and then my other question was, in case something happens to you, what does this kind of insurance cover?
So, and this is why I tell my clients, you always have to read the fine print. It's so unfortunate that this specific insurance covers incidences that happen at work. So it really covers you death only. It's a death payout, but you have to die at work. And I always ask my clients, what are the chances you're going to die at work?
Yeah, I mean, you have to. Yeah, if you fall sick, you go back home.
Yeah, when you fall sick, you call off or you stay home. So you're not on the clock when you're sick, unless you do something in the line of manufacturing and work with like machineries, and then maybe a machine does something to you.
That's only when it covers you.
Yeah. But it's very rare. Very rare.
Okay.
Yeah.
So probably that's why it's cheap.
Yeah, and that's why it's not traditionally considered life insurance, because it doesn't cover you when you die, because you have to die at work.
Okay.
Yeah.
Okay. All right. So let's talk about the term life insurance.
So term is the other temporary one, meaning you only get it for a specific period of time. So let's say you want to do a 10-year one. You can do 10 years, you can do 15, you can do 20, you can do 30. And the advantage again with this one, it's one very popular. You'll see it advertised everywhere. TV, you're going to have it advertised in magazines, newspaper. The disadvantages of this product is it's temporary, like I say. So after 10 years, you don't have coverage unless you renew it. And most of the time, or 100 times of the time, when you renew, it's always more expensive. Because if you think of, if I got a policy when I'm age 20, 10 years from now, I'm going to be 30. So I'm older. So my premiums go up. There's no value to you, or like the payouts are very low. There's a low percentage of payout. Like 2% is the only percentage that pays out. 98% of the time it doesn't pay out. What I mean by this is it really has to be a freak accident, maybe a gunshot, an accident, very unexpected. Or let's say you are in a plane and the plane crashed. That's the only time it pays out. Most of the time, my clients who have term policies outlive them, meaning I don't want to die after 10 years. If I'm 30, I want to be 100. So after 10 years, after 20 years, I'm going to have to renew it. And when I do renew it, it's more expensive. And then there's no money back to me. The money that I put in there is just gone. So, yeah.
So there's no payout. The only payout is when something happens.
a freak accident, or the other reason why there's no payout is, let's say, for example, you got sick, or your bank information changed. Sometimes you lose your wallet, and then you have to change your debit card, credit card, whatever. And let's say you had used a specific card as the one to do the monthly premiums. If you don't make a payment within 30 days, your policy cancels out. And then if something happens to you where you pass on, you're not covered. So very low percentage as far as paying out. So, yeah.
Oh, wow. How about the whole life? Can you talk more about it?
So the two permanent is the whole life and the IUL. And the advantages of having a whole life is it's permanent. Like I said, most of them go all the way to 100. So the first time you get this policy, you don't have to keep renewing it. That's it. The other advantage is the premium remains the same. So let's say, for example, every month I'm paying a premium of, or I'm contributing a premium of $300 or maybe $200. Then that will stay the same for the rest of that policy. The only disadvantage, and before I go to the disadvantages, some of them have cash value accumulation, not all of them. The disadvantages of this one is it's not cheap.
Okay.
And then another disadvantage is if it does have cash value, you only take the death benefit. What do I mean by this? Let's say my client decided I'm going to take $1 million coverage, and this specific policy does have a cash accumulation, meaning money you put in the policy actually grows, compounding. So after a certain time, there's going to be money in there for you to access, and you can access it through a withdrawal. But if you withdraw anything, you have to pay it back. But if this specific client passes on, their beneficiary will only get the death benefit, meaning just the 1 million. So if there's $100K sitting in there that grew over time, over time of the life of the policy, that stays with the company. It's not paid out to the family. And that's a disadvantage because you want as much, you want the whole policy to get paid out to your beneficiary.
Okay.
So that's a permanent whole life.
So is this the one whereby somebody can borrow against it?
Yeah, so this one you can loan money out of it, but you always have to pay it back. You cannot. So how do I say this? It's almost like you withdraw money, you have to put it back, or you're loaning money from your cash value. So like I said, if you've had this policy for a while, money in there is growing, so it's adding every single year. And let's say, for example, you want to access the funds in there for whatever reason. Maybe it's an emergency. Maybe you want to take a trip, or whatever it is. Then you can access that money, meaning you can be able to take it out, but you have to pay it back. Okay. If you don't pay it back and unfortunately you pass on, then it gets deducted from what is paid out to your family. Your
cash value was. Okay, so how about, I was going to ask, so it's considered an investment kind of form, because you said it compounds every other year.
So I always like telling my clients, life insurance is technically not an investment. Okay. It does have those components, but the main reason or the main function of an insurance policy is pretty much protection and making sure that if you are the breadwinner, if you're the person that's bringing income for your family, if you die, in the event that you die, that income that you're bringing home is replaced. That way your family is not suffering, is not trying to make ends meet. They're not trying, if your kids were in private school, they're not changing schools and going to a public school. If you guys had a beautiful home, you're able to continue paying if it's mortgaged. That way their life doesn't change. You're pretty much ensuring your income or your life, because you're so much valuable. I always tell people you're very valuable. What you bring to the table is very valuable. You want to protect that. So yes, it does have those components of investment, but the main function of it is protection of life.
Okay.
Yeah.
All right. So can you speak about the IUL?
So the IUL is another permanent policy or another permanent life insurance. So this one does have cash accumulation. And this one, the beauty part of it is, yes, if you die, your beneficiaries will get both
The cash value
the
and the
cash value
accumulated
and the
value.
death benefit. So, like in the previous example, we had a client who had $1 million policy and 100,000 sitting in the policy. If they were to pass on, their family is getting 1,100,000, not just the 1 million.
Okay.
Now, disadvantages of this specific one, and again, this is a permanent one. So most of them go all the way to 121. So, and also the premiums remain the same. So if you get approved today, you do not have to renew this another time.
Okay.
And it's going to go until you're either 101 or until whenever you're going to die. If your premium every month is, let's say, 350 or 400, then it's going to stay the same for the rest of the life of the policy. Now, some of the disadvantages is this one is very hard to qualify. So they're doing a health background check. They're making sure you're very healthy. They also do a criminal background. They want to make sure you don't have any priors. You don't have even traffic violation, your license is not suspended, and things like that. So a lot of people, I always tell my clients, please, applications are always free. Most companies offer them for free. So if you're not sure, just get an application put in and see if you get it. But it is such a powerful asset to have. Even as I'm doing these financial services, I'm now recommending this more to my clientele. Like, this is a very powerful asset that not a lot
You
of
have
us.
to be clean.
Yes. Yes. So if you're young, the better it is for you to.
Yeah, because you haven't started
Yeah.
messing up.
Yeah. And then I also tell my clients, this is also a policy you can get for your children, because you can utilize it as a college funding, and the younger they are, the cheaper. Yeah.
Yeah, okay. So does this one compound or it doesn't?
It does. So the cash value accumulation is compounding. And I always, it has so many benefits. Literally, I always have to show an illustration and show my clients how this actually works. It's so many. Let's think of it like this. You know of a pocket knife?
Yeah,
you have a pocket knife, and there's those that have different. Like, it's not just a knife. There's like a can opener, a thingy. There's this many things.
Wine opener and all of
So it's such a multi-purpose tool. An IUL is literally the same. It has so many tools and function. The key function of it, obviously, is protection. So it's meant to pay out to your family once you pass on. However, the money that you're contributing to the policy does grow in the policy, compounding, and you can access it. Now, you can access that through a withdrawal, or you can loan from your death benefit. And you're able to utilize these funds for whatever reason. It could be an emergency. So some people use it as an emergency fund. It could be to fund your college for your kids. The one thing I know about an IUL is it does also come with living benefits, meaning if you were to get sick, there's the payout that's coming to your family. Let's say, for example, you had a stroke, or you had a heart attack, or you had a major organ transplant, or maybe you got paralyzed. Maybe you got into a really bad accident that left you paralyzed. There's a payout that's coming up to 90% comes to your family, depending on the severity of the illness, the critical illness. Chronic illness is another rider or another benefit. So you're actually using it before you die. So remember, the misconception of life insurance is only when you die.
For death. I was going to ask you that,
Yeah. So this is one, this is why I say this is a very, very powerful asset to have. You're able to utilize the benefits while you're still alive. Because when you think of, and I always ask this to my clients, when you get sick, and if you're the main breadwinner, income stops coming, but you're still here. And to make matters worse, I always ask them, does you being sick make it, life better or worse? it's always worse because you have not to take care of yourself, your health. There's medical bills, but bills don't stop.
Yeah.
And then income stops because now you're not able to go to work. So this can replace your income, meaning if there's a payout that's coming to you, you can utilize that payout to pay for your medical expenses. You can utilize that to continue paying your bills and making sure that, you have a roof over your head, you have food on the table for your family. Life continues as it is.
So having spoken about all of them, who, I was going to ask which group, but anyway, which is the best one to recommend to anybody?
What do you mean by best to recommend?
That has more benefits than, that has more pros than cons.
Oh, absolutely. I am recommending an IUL. And this is one of the products that I'm so passionate about, making sure that I'm educating my client so they do understand how it works. So I'm now more recommending this product to all my clients.
Okay.
Yeah.
Okay. All right. So what would your advice be to somebody who has a group life insurance from work?
My advice is to get more life insurance that they own. Because remember, group life insurance is not your policy.
It's the government, it's the employers, whatever, insurance.
Employers.
Okay. And whoever is on time to get a whole life, because the time increases every time you renew.
So that, and it doesn't have living benefits. So there's no benefits while you're still alive.
So it's only death beneficiary.
Yes. Okay. It only pays out when you die. And like we say, rarely do you die out of a freak accident. It's more like you're either sick and you don't get sick for one day and die. You're staying longer. People are living longer now.
True. Yeah.
So
yeah. So given we have spoken about the life insurance, do you think this is a common knowledge in the society, or is it something that people just hear about and they don't get to dig deeper to it, or their curiosity doesn't spike as much as it needs to?
I think there's such a bad rep about life insurance, just in general. And then the other thing is, a lot of us are not educated, or we really do not understand life insurance. So there is a gap when it comes to that, educating people about what life insurance can truly do for you and for your family. So I think there is not an understanding of what it is, or if it can be, because I know I'm going to get in trouble for this. You'll find most people have insurance on their homes. They have insurance on their car. They have.
And I was going to talk about that, because I think after the conference, I was questioning myself. I'm betting on somebody else, because you're paying, even the insurance on cars can go as much as to $600 a month.
Oh yeah.
They can tell you to pay that, and you'll feel obliged to
not
pay.
Obliged, you will pay.
You feel to be obligated to pay, because you feel like you lose the car. But at the end of the day, you're betting on somebody who wants to take care of a materialistic thing, instead of you betting on yourself. Like, if I fall sick, what is going to take care of me?
And that's the one thing I always say. So if you think of, even when you buy a new car, you literally cannot get tags unless you have insurance on your car.
Yeah.
And one thing I tell people is, like, let's say, for example, you still paying the car note. The person that's making this car, or the payments, is you through your income. So your car is insured, but the person that's making the payments to the car
has not insured themselves.
So what happens when your income stops coming? You don't have the car either.
Yeah.
So it's not, I don't want to say it's ignorance. It's more of an education gap. So I think a lot of people are not knowledgeable about what truly life insurance is, and what kind of, because it's truly an asset.
Yeah, I think I got it from the convention. After I was like, even somebody mentioned about the car thing, and I was like, yeah, it makes more sense, because I can feel like when I fall short of paying the car insurance at the end of the month, I'm like, oh, they're gonna take my car, so I have to pay. But if I look at myself, I haven't paid or I haven't gotten life insurance. But when I fall sick, now the car hasn't been paid.
Yeah.
I don't know how to take care of myself. I don't know how to take care of the bills.
Mhm.
Then I was like, if you skip the car payment, you can take care of yourself first.
Mhm.
Which means your body is the gear to get the money to take care of all
It's
this.
the heartbeat of everything that's going on in your life,
Yeah.
literally. Especially for most people most of us are 9 to 5.
Hmm.
You depend on your 9 to 5 to be able to
Cover
have the
everything.
life you have.
Yeah.
Whether that's owning that car, whether it's living in the beautiful apartment or home that you have,
Mhm.
it literally takes your income from your 9 to 5. Or if you're a business owner, you being able to run that business is giving you the income.
Yeah.
Yeah.
Yeah, cool.
Yeah.
So yeah, that was my take from it, and I think I loved
Mhm.
it.
That's-
And
that's
I'm
amazing.
geared to take care of my life, and not the property. Anyway, that aside, let's
Mhm.
talk about the asset protection.
All right.
How do you tell your clients or advise your clients to protect their assets?
Great question. Get a trust.
You know?
I always tell my clients to get a trust. So there's this concept of you own nothing but control everything.
Okay.
So what exactly is a trust? A trust is a legal arrangement where the person opening the trust wants to transfer whatever assets they have to the next generation and the next.
Uh-huh.
So they use a trust to give clear instructions and direction of how they want these assets either distributed or passed on. Why does a trust protect your assets? The biggest one is if you have assets owned by a trust, meaning, let's say, for example, you have real estate or you have life insurance can actually be owned by a trust, or whatever assets you may have, you can actually make your beneficiary of your life insurance payout to be a trust.
Okay.
Because if you think of it, let's say, for example, you're a young person, you do have children. If God forbid you passed on early on, before you are like older, your kids are not grown yet. If they're under 18, you don't want your children to be the beneficiary because they're not legally, cannot even get the proceeds of the life insurance. So they can't get the payout. Why? Because they're underage. So it has to go either to another person, or if you don't have what we call a contingent beneficiary, so you add an extra person. So there's always the main beneficiary. And then if this one is either under 18 or they're not there, then there's the next line of beneficiary. So a trust protects you from your assets going through probate. And probate is a process in the United States where the government actually freezes all your assets, all your accounts, and they look at all the assets you own, or everything you own turns into what we call estate. So they go through your estate or estates and make sure that you don't owe anything. And if you owe anything in debt, mortgage, credit card, they make sure that that's taken care of. The other thing probate does is if you have any taxes, let's say, for example, this year, people haven't filed their taxes. If you owed any taxes, you're going to pay those, whether you're alive or dead.
So you owe the government live or dead. Okay.
Yes. Uncle Sam has to get what is his. Now, this is why I tell our clients, put your assets in a trust, because a trust bypasses probate, meaning it doesn't go through probate.
Okay.
And then life insurance is also another asset that doesn't go through probate because it's not considered income. It's more like something you're leaving to your loved one, like the people that you're leaving behind.
Okay.
So it is important to sit down with most of the time, an attorney or like a lawyer will have to help you with creating a trust. But that's one of the services that I provide. I connect my clients with the appropriate people to help them, set up a trust for themselves.
Yeah, I'll leave your number and I'll leave your number and information down here for the people who need help, because I know you told me you can talk a lot deeper on these things, but I think we had to touch the surface of what things people don't know or what they know and they just brush it off.
Yeah.
But if they need to dig deeper and ask questions, I'll leave the information right there for them and they can get reach to you or at you.
Mhm.
So yeah, speaking of, I think you spoke about the probate court,
Mhm.
and I think I've seen how which kind of it made me jog my memory a little bit because I
Mhm.
think the one problem that a lot of Africans have
Mhm.
is you see a lot of Africans living in the United States.
Mhm.
They've lived their life. They haven't gotten no life insurance.
Mhm.
They haven't planned their assets. They haven't gotten no trust.
Yeah.
And then you get somebody who passes away, and then
Mhm.
now you see people creating groups, be like, "Hey, let's make
Mhm.
contributions for this
Mhm.
person."
Yeah.
I think we could have gotten away with that, or
Yeah.
there's no need of people making contributions if you had a
Mhm.
life insurance that can
Mhm.
give you like probably like let's say either 250,000 and above to a million,
Yeah.
because that money comes to cater and cover everything that people would have done for you.
Mhm.
So the only thing that people can do is just show up
Yeah.
and send you off in a peaceful
Mhm.
manner.
Mhm.
So I think that's something that most people should get, most Africans should, and the Americans too. I think the one thing I've seen is GoFundMe.
Mhm. Mhm.
You see people like, let's say they get into an accident,
Mhm.
and you see people being called into a group. You're like, hey, this is a GoFundMe for so and so.
Mhm.
We need to pay for this,
Yeah.
either medical bills or the send off.
Yeah.
And I think if people can get like life insurance, it can be protective of
Mhm.
them or
Mhm.
their asset.
Mhm.
If they can protect their assets, get trusts that can be passed down to their
Mhm.
kids
Mhm.
and the next generations. Because I think
Mhm.
somebody, a white dude said one time, because I think and everybody understands the relationship between the cops. Like right now, we got ICE.
Mhm.
So a white person said,
Mhm.
black people, if black people are smarter,
Mhm.
they would get life insurance, get a 500,000 life insurance.
Mhm.
If you get like 1,000 people with that,
Mhm.
now the life insurance organizations will stand in to protect the black people because now they are losing money from their own payments from the people.
Mhm.
Because now if you see if you get black people dying each and every time, and every time they have to pay 500,000, they are losing money.
Mhm. Mhm.
So I think it made sense at that point because now it makes sense why a lot of white people don't get shot on the point or when they're being pulled over. I mean, it's an arguable, it's a debatable thing.
Very. Yeah.
It is debatable,
It.
but at the end of the day, they know it too.
Yeah. So let me touch on the GoFundMe actually, because that's unfortunately. So there's nothing wrong with GoFundMe, and it's such a noble thing to do because it brings the community together.
Yeah, I didn't say it's bad. It's just
No. I know you didn't say it is bad.
yeah,
I'm just making sure that somebody knows that
yeah.
it's not a
I
bad
hope they
thing.
didn't take it the bad
Yeah.
way. I'm just
No.
saying there's preventions we can do before all this.
Yeah. It's a beautiful thing because what the only problem we're running into is most people only rely on the money that's coming through the GoFundMe. And I tell my clients that even if you had as little as $100,000 policy,
Yeah.
this is $100,000 that will come to your family.
Yeah.
And not only would that help with the final expense, maybe that's your funeral arrangements and whatever, because on average, funeral arrangements here in America is anywhere from 8,000 to 12,000.
I've
Sometimes it
never
can
known
go
actually.
to 20,000 even, depending on how fancy you want to.
Yeah, I've never known how much it costs.
Oh, it's average there. Because you have to pay for your if you're not getting cremated, there's your coffin, there's your piece of land where you want to get buried, your tombstone, all of these things that sometimes. And one thing I say, we're all gonna die, so let's talk about it because this is the one guarantee that we have in this life is we will all die at some point. So the other way I like looking at this is literally when a family or a client has a policy, it's money that's coming back into the community. Because think of it this way. So let's say a father passes on. He's leaving behind his wife and his kids, and he had a $500,000 policy. The entire $500,000, and if he had an IUL, maybe there's some cash value in there, so it's going to be more than that, gets paid out tax-free to his family, his wife and his kids. There is nothing this woman cannot do. Number one, she's going to be able to go, on with life as she knows it because he was bringing the money home. So that doesn't change because this payout is going to help us continue paying the bills that he was taking care of. And the other thing is, let's say, for example, they wanted to do an investment and it could be real estate, it could be anything. This payout can help you start an income generating asset. You can buy real estate, and that could be another income to replace whatever your husband was bringing home. So it's such a no-brainer that literally we're injecting money back into our community, and the next generation is not going to look the same, because if we don't have this protection, we're letting our families suffer, because now they have to start scrambling for what do we do? How do we pay our bills? He was the breadwinner, now he's gone. Mom was a stay-home mom. We don't have any income coming. And it becomes stressful. And most of our community, we always want to get sent back home. And that journey costs money.
Yeah.
And that's even more expensive. It goes all the way up to $30,000, because your family members want to travel too. And it's such an expected event that they have to buy airline tickets at the last minute.
Yeah.
So it's true what you say. There's a gap when it comes to our community and people of color. And I think that is the reason why I'm so passionate about this, is because we truly, truly do need to educate our community about the importance of this and how much value it brings to their lives.
Yeah, true. Yeah, I think we've exhausted much. I think there's questions I can't ask you because you can't dig deeper. But I think for the ones that you said, the ones we've discussed about, if anybody is curious, if you want to know more, she can talk to you one-on-one, comment, inbox, DM, whichever feels good for you or easier. She'll get at you, talk to you, and she can educate you on what you feel like you didn't get a grasp on. But without much ado, I think that's pretty much all we had. Not unless you got something else.
No, I was actually going to ask you a question. If that's
okay. Go ahead. What's the question?
So I think the one question maybe ahead for you, which I think you touched on it, is like, what was your one take away from when it comes to like, you know, protection and whatnot?
Okay, so when so the one thing that I got from that was you have to bet on yourself before you bet on another person. Because I think the one thing that we are used to is betting on somebody else.
Yeah.
Because okay, let's give an instance. I know probably this is gonna land me in the wrong place. Where we at right now, it snowed. We had a snowstorm. We can't leave the house. Some people can't even leave the house for 3 days.
True.
So let's say, for instance, something like this. If you didn't plan yourself, what's gonna happen? Because at the end of the day, there's some jobs. It's may or may not. They want you to show up. If you don't show up, it's a write-up. So something like this, they can write you up for it.
Yeah.
So what if you lose your job? Do you have anything that can sustain you until you get your feet?
Or like even that coverage goes away if you get fired.
Yeah. So it's the same thing. I think even I've had the same story about delivery drivers for Amazon who got laid off. So if, let's say they planned themselves, I'm not saying this is something that you just do it out of nowhere, but I'm just saying if this literacy was there, because we don't get taught this from school, because if we were taught this from school, we would have been practicing it. It might have not been the best, but we could have been practicing it. It's the same thing as how we've been taught in school. You gotta go and apply for a job, you gotta get the job. So we put that into practicality, because now we're out here. I'm losing this job, let me apply for another one. I'm losing this job, let me apply for another one. So if we got taught this financial literacy from school, like, hey, if you bet on yourself before you start betting on these other people, you'll be fine, because this is your retirement plan over here. Somebody is gonna get loose, they're going to let you go, but you're not going to let go of yourself if you protect yourself first. So that's what I took from it. I'm like, bet on yourself first before you bet on somebody else. Yeah. Because now you'll be in a better place.
What about one misconception you had about life insurance before you got the education?
So how would I put it? I wouldn't say it's a misconception. I think it was a, what's the best word? I needed more understanding of it. Because I think somebody mentioned it to me, but I didn't know it was 4 of them. I didn't know nothing about the group life insurance. Because I think even if I went to a company right now and they told me this is life insurance, I would take it. I would be like, okay, good. Let me sign for it. I'm good. But at the end of the day, it's more disadvantageous than it is advantageous. Because now I understand it's for the company, it's not for me. They're only signing you up for you to feel better if something happens at work. What if I'm at home? It's not covered. So that's something that I learned from it. And then the term one was, somebody can tell you about the term. They can be like, we have a life insurance that's only for 20 years. You're going to feel like, okay, I'll be dead within 20. You might not die, so who knows?
No, but most people are not dying after 20 years. Yeah, so they're living longer.
And the problem is, you might get this, and then after the 20 years, when you renew it, it's going to be more than what you used to pay. And then you're going to be like, okay,
Yeah.
what's the point of getting another one? But now you're not
Yeah.
protecting yourself.
Yeah.
So, yeah, it was more beneficial for sure. And I think I learned the differences.
Mhm.
And now I think I have to plan myself better to get a better
Oh,
coverage.
that's amazing. I'm
So,
glad,
yeah.
I'm glad you.
So now I'm not betting on no car insurance. I'm betting on life insurance.
Well,
Just to
car
say.
insurance is also important.
It is
Yeah,
important, but
protect yourself
Yeah.
too, because so it's a beautiful thing, and
they can tow away the car. They can tow you. They can tow you.
Hey, well,
They
you
can
can-
tow you.
if you're protected, you can make more money and
Yeah.
buy another car.
They
but
can tow you.
yeah,
So
yeah.
that's what I say I took from it for sure.
Awesome.
What was your takeaway anyway? I mean, you've been in that business anyway. So
Right, but I think the one thing that really made me start wanting to do this in the
Mhm.
first place is I have always wanted to get a better understanding on finances.
Mhm.
Sometimes, this is what I tell people: finances and how to be better financially has never, like, the wheels have never been reinvented. It's the same
Yeah.
thing. You have money coming in.
Mhm.
You try to keep your expenses, which is money out, within your budget, pretty much. And then whatever is left over, then you invest that money and have that money growing for you. I think that has always been the basics. But having this concept of protection was never something that I was aware of. I didn't even think of, like, hey, what if I was not able to do my 9 to 5 and bring the income that's paying for my bills?
Mhm.
Then what? So when I learned about, there's a product that can actually, cover me or protect me in the event that I'm not able to work, and if that event is because due to a sickness, then that was a no-brainer for me. Like, I was like, oh, I want to know more.
Yeah.
And there's so much knowledge that I've gained just doing this and being able to help my community. So we do have, our mission is to make sure that no family is left behind. We want to make sure our children and our children's children are doing great. And to even add,
Mhm.
I know most people who grew up here, who are born here, know about the Rockefellers. This is the same concept that they used that has sustained their wealth up to this day.
Yeah.
So there's a legacy continuation because they made sure every person that was born in that family had life insurance. And when you died, that money, instead of that money going to your beneficiaries, it was put in a trust, and then it was kind of distributed in a specific manner that it kind of controlled the money, and the money never.
And they still compound. It never dies out.
It's still growing and compounding and making them more money. So they're still wealthy to this day.
No.
Yeah.
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 So yeah, that's what I took from it, and I think
Awesome.
it's more
I'm
beneficial.
so glad
One more thing, I'm interested in this. I think, yeah, having looked at it, yeah, I'll go check on my life and I'll have to book a meeting with you.
Sure, I'll be more than happy to help you.
Yeah.
Awesome.
Well, without much ado, that'll be it until next time. Deuces.
Bye.